Moving onward to our next session, that is panel discussion, the changing role of CFOs in the age of digital transformation. How technology is driving innovation and transformation in finance. Role of CFOs in the age of digital transformation. How technology is driving innovation and transformation in finance. Introducing our moderator, Mr. Shekhar Sood, Group CFO at Bajaj Capital Limited. Also introducing the fellow panelists, Ms. Mahima Arya, Associate Director at Wolters Kluwer, Mr. Ankit Maheshwari, VP and Head of Finance at Cars24, Ms. Priya Sharma, Vice President of Finance at Ecom Express Limited, Mr. Omkar Prasad, Finance Director and Chief Accounting Officer at Schneider Electric, Mr. Krishna Tadepalli, Director at Avalara, and Mr. Achal Modi, Head of Finance International Business at OYO. Over to you, Mr. Shekhar Sood.
Good morning, everyone. So, in this session, we will be talking about the changing role of CFO. And we all are familiar with the role of CFO and how it has evolved. Starting from the basic accounting thing, which we were earlier doing, to now playing the role of a strategic partner. So, there has been a lot of transformation in the role. And here all my co-panelists will be sharing their insights, especially on specific to their industries, how technology has been transforming finance function as well as the whole organization. And if we talk about especially the role evolution, so now earlier we were saying that wherever money is involved, finance is involved. And now we see that wherever technology is involved, then again the finance is involved. Because when we talk about these technology functions, a lot of investment is required. So wherever the money is required, again, finance has to be there. And we have to ensure that we get the required returns, not only in terms of monetary, but in terms of quality as well. So I can start the panel discussions here with my co-panelists. So I will ask my first question to Ms. Priya. Again, this is again on the role of CFO. So maybe you can elaborate on the role of CFO, like how it has been there in terms of finance transformation.
Thank you, Shekhar. Good afternoon to everyone. So in the recent times, we have seen that the CFO's role has undergone a lot of change, from being the custodian of financial data, compliance, and control, to now helping propel the company to the next level by driving the corporate strategy with the help of technology. Now, there is an abundance of technology today, and the most difficult task for the CFO is to make the choice of what technology to bring in. Now, keeping in mind, of course, the simplicity, the ease of adoption, and the real-time insights which will help in the decision making. It is very easy to get carried away by benchmarking the technology in the industry, but what works for the others may not work for you. So we have to be very cognizant of the fact of what our business is doing and what is our business requirements, along with how we are culturally driving our organization. So again, if you look at usually the technology is driven top to the bottom. However, we Ecom Express are driving the technology bottoms up. So CFO has to ensure inclusivity or inclusion of the people, as well as driving the right culture to help in the implementation of the technology. Digitalization and innovation is fraught with a number of challenges and risks. We, during our journey of transformation, made our share of mistakes. In our invoice automation project, there were a lot of delays due to various reasons, COVID being one of them, and I was handed over the project as a legacy. So what were the challenges the company was facing? It was, first of all, because of the delays, getting the vendor to restart the project was very difficult as he had low interest. Then second was, we had underestimated the timelines of the project. Third was change in the management, and hence the overall vision. And finally, it was the change management at the user level. What were our learnings? We learned, first of all, to have a plan. we should have a basically fixed plan, which is the critical path. However, it should be agile enough to be able to accommodate any changes. Second was to get a buy-in from the relevant stakeholders, and at the same time, keep the progress updated to the various stakeholders who are influential. Finally, re-engineer the process. We should revisit the process and not just sort of adapt the technology to the process. We should realize that this is the time or an opportunity. Implementing technology is an opportunity for us to relook and reassess the age-old systems and processes and make them more efficient. So through all of this, we have been able to successfully bring about or implement a lot of transformational projects. One of them being the employee impressed and reimbursement project, where we were able to reduce the timelines of processing from 30 days to T+1, and also with minimum human intervention. So with a scale of 4,000 plus users, we have also launched we've launched an AI project, which is Bullseye, which will help to reduce the cost related to shipment lost, as well as reduce the speed of deliveries. So there are various other projects like PR to PO, and then fuel reimbursement through GPS tracking. So all of this has brought about a lot of rigor around technological development in the company. Now, not all of the features that the business requires are available in the industry-grade softwares, and the cost of scaling these is very high. So a lot of CFOs, they prefer bolt-ons or peripheral applications. So, then again, technology being a great enabler, the sort of deployment and how we will utilize the technology will depend on our business knowledge. The kind of investment in terms of money and effort and where to put it will depend on our assessment of our requirements and mapping to the overall organizational priorities. Eventually, everything we will do will be to deliver to the customer experience. My customer could be internal, that is board, investors, management or employees, or an external customer. The technology should enable me to enhance and to serve my customer. Thank you.
Yeah, thank you, Priya. It was very, very elaborated. And I think at the core of everything, we should keep our customers, because they are the one for whom we are doing all these things. So whatever technology changes we are doing, like if it is improving the processes and especially the customer experience, then for sure we will see the impact. Not immediately, but yes, in the long term it will come. So we have to keep customers at the core when we are driving these technology changes. So now coming to the next question from Mr. Krishna. So what are the key technologies that CFOs are adopting to drive efficiency and effectiveness in finance function?
Thank you. I think the first technology application finance leaders would be looking forward to is a ERP with proper updates. And I think that's an area where quite a lot of finance leaders are still struggling out with the constant changes coming up from ERPs. But on top of it, a ERP will be the kind of a core base on which there are multiple applications to be built depending upon the processes. So I would try and categorize into 3 different steps. So first one is about usage of cloud native platforms. So the usage of cloud platforms have increased significantly. So in 2021, the entire finance community, about 40% of the applications are more driven on cloud, and still it was more on the on-prem. But the expectation by 2025 is 95% of the applications are going to be cloud native. So as we are going through cloud native applications, there are very focused tools and softwares, like for AR and treasury management, you have likes of HighRadius, and you have new innovative startups who are doing significantly well, like Airbase, and for tax technology, companies like Avalara, and biggies like Thomson Reuters, Vertex, etc. And on top of it, the second point is about the kind of the composable applications, because finance as a business unit, if you really look into, It is more module driven. There are multiple modules, and every module has to talk to each other. When we talk about order to cash or a procure to pay, or even your reporting, or even your tax compliance, and even your analysis which you want to do, everything is intertwined. So it is important and imperative that you need a solution or a technology which can seamlessly integrate with multiple applications. So if you also look into it, the usage of APIs have grown significantly in the past 2 to 3 years. And that, the summation of your cloud native applications and followed by composable applications, that will give you an area to decide what are the processes you can automate. So if something can be the typical mundane tasks of looking at or skimming through your pages of multiple of your books of accounts and etc., if that can be done with a click of a button, the best example is reconciliation. So I'm sure many of us are currently looking at reconciliation has become more automated process. So that is an area where that brings the third pillar, which is about the hyper automation. So now if you bucket all of these three, so in the aspect of hyper automation, artificial intelligence, machine learning, and robotic process automations are playing a crucial role. So, like the co-panelist Priya was mentioning about, there are some kind of trivial applications where you have brought it down from 30 days to 1 day. So that's a significant improvement. And I also want to quote the very first word which Mr. Singhania in his very first presentation today talked about. So finance as a function is no more a back office function. So I will not call them as key business drivers, but I would clearly say that they are the critical success factor in execution of a strategy. Whether you want to talk about a growth strategy or a profitability, or you want to talk about global expansion, I think it is important that the finance leader has to be there, and it should be his or her sign off before you go to the next kind of your strategy. And that is possible when you free up their space by clearing the clutter of their plate. And that is absolutely possible with technology. And when we talk about these three pillars, there is one important pillar which drives these three pillars. That's about the talent. So when we are trying to talk about automation, many leaders in the previous sessions have touched upon it, and I just want to echo their thoughts. Today, the kind of a feeling we are giving to some of the finance leaders and the core finance executives who are working is that technology is a replacement of human capital, which is not the case. So we need to, while we are trying to figure out the areas of automation, it is important we need to invest heavily on upskilling the existing talent and also trying to understand where this talent is today, find the gaps, and again try and get them certified or invest in them so that the talent is going to be the core function or the core element in your successful digital strategy or your digital transformation. So when we can get all these three right, so I think it's just success all through. So I just want to quote an example from a core retail company whom I worked with a couple of years back. They were doing quite a lot of work independently. So the e-commerce system through which they sell, which is their major channel, doesn't really speak to their accounting system. And the accounting system doesn't really talk to their dispatch system. And the dispatch system and the customer feedback are nowhere in the loop. So there is a huge disconnect between departments. Eventually, there are a lot of compliance coming out. There is a delay in invoicing and etc. Now they started adopting Oracle NetSuite, and they have seamlessly integrated every of their departments now. And there are specific outreach solutions through which they can rate the customer satisfaction, and the customer satisfaction is directly being pumped into the business head's dashboard, wherein they are going to make informed decision making by collating data. How many orders are processed in a day, and what is the current finance situations, what is the average time of shipment, and what is the kind of satisfaction. So the entire span of business is being looked upon in one dashboard, where it was taking multiple Excel files and macros to be run around and confusing. So this is one example, and I'm sure in this room we'll have umpty number of examples on that one. So I think technology is here for our benefit, and let's utilize it and grow.
Thank you, Krishna. Yes, there are a lot of technologies which we are using from machine learning to RPA. So all these are very critical. But you touched upon very important aspect of the people here, that we must ensure that due to the technology, like the people don't lose their jobs. It is just a fear, frankly, because when the computer started, then also there was a fear that maybe people might be losing their jobs. But it just brought in the efficiency. So these tech also, whatever evolution is happening, that will be bringing in only the efficiency in our functions and in our organizations. And we must ensure that the people who are affected with this, they get properly trained and they are brought into the ecosystem and not just left out. So I think very well captured this point. And then another point that you captured was integration. So yes, there are various systems, various technologies are there, but their integration is the key. So I think that's a very, very valid point. So now I come to Omkar, and I would like to understand from you the digital transformation impact on financial reporting and analysis, and especially on the decision-making process within the organization, which are quite key for the top management.
Yeah, thank you. I just reflect back few years back, before digital transformation was a dream, and all our finance folks used to prepare in the financial reporting, decision making for the business leader. They use Excel, lot of data massaging, too many data collations in the different tools, and there was also on top of that a restriction of 65 rows in the Excel. Okay, just imagine that day or not today. Okay, so financial reporting I will split into two parts. Okay, how you actually operate on the day-to-day operations and accounting, and also the closing. And then the second part, the number which you have to report as per the statutory requirement for your management reviews, etc. So I think the first part is very important. I think my co-panelist was referring it, the how you close the operation, whether your P2P model, your O2C model, your R2R reconciliation, is it connected each other? Is it something in isolated tool, or it's something is a one, you can say, integrated tool where you completely connected each and every transaction at every stage. So that is very important in the pre-closing period in the financial reporting. The second part, when you come to the financial reporting, in the various financial report, we're not limited to the statutory reporting or the management reporting. Any reporting which FP&A does for the business, it's depend that you have very clear strategy. And if you have a clear strategy, what is the need of the business, what is the need of the regulators, what is the need of the the auditors, if you have this, I can tell you the digital transformation has enabled successfully that free up your time in making Excels. It's not taking other I will say intelligence from you for sure, the digital technology, but it will take your ease out your efficiency to do more focus on more insights on the actionable insights on the data. Personally, I give you my example. In my company, we're working in closing. My month in closing used to happen in D+6, what we call is 6 days. And we worked in the last 2 to 3 years, and it's not a one-day journey, it's not a one-month journey, it's a progressive journey. And we know that technology is quite upgraded, almost faster than anything else. So few years back, I'm talking about the just pre-COVID era, we used to close books in D+6. That was also with too much pressures at the end of all the finance people to close the books. And today we are closing in D+1 almost. And D+2 is almost you have a P&L, finance, balance sheet, everything ready. How it has happened? We fix and touch each and every business process. It's not that accounting process. As my co-panelist was saying, it's not limited to finance. It's a supply chain, it's a purchase, it is your manufacturing process, it is your sales and distribution process. Every function has to talk to each other to come to the consolidation at the finance level, because that's the finance indeed give the transparency reports that how it has been performed in the month. So that's I will say in the financial reporting has great help and ease of doing the reporting and free up a lot of energy of the finance folks. So that is one. Coming to the digital decision making insights. When you have a transactions and you capture the transaction in the right way, business leaders what ask? They ask scenarios. They say, okay, I'm going, see Omkar, I'm going to the north. Tell me what is the sales footprint by customer, by regions, by segment, etc., etc. Okay, and this can't be done in Excel. I can tell you. If you have your ERP connected with all the data and you have a system integrated accordingly with the technology, you can give by click of the button. And this is really make a difference in the business. And this is what it's make a happy to the CEO and the business leader. As we say, the finance is a co-pilot with them. If you don't give the data on real-time, decision doesn't happen in the real time. If you ask when they are sitting in front of the customer and say that, can you give me the details of this site of the industry? And you say, no, I can take only 3 days, sir, then I will come back to you, then gone. So this is what I will say, the digital decision making is helping, technology is helping a lot in decision making. It's not necessarily also to dependent on the finance folks. It can be, I saw that in many tools. I think my colleague was talking about the expense approval. You can do in the mobile. As a manager, you not to wait for that you are traveling, you cannot approve. You can approve even in the mobile that expense approval to the employee. You can give the data through the mobile that what dashboard you want to share. So much, ease has bring it to the business to make the business decisions and do the transparent reporting to the regulators, to the company and to the, the management.
Thank you, Omkar. Yes, you are very right. Technology has really brought the speed, efficiency and accuracy in the reporting. And I really like the term like click of a button. I know it's never a click of button because it takes some time, but what goes the energy and the effort to bring to that level, I think that's really the important thing, where like finance and especially the technology people, they have to work together to ensure that finally the speed at which management is expecting the results, they get those results in those timelines. So really important for that.
Just wanted to add a point here. So we in our organization, we have implemented CPQ, which is primarily more from a Salesforce perspective. In our kind of business reviews, the CFO, whenever he steps in, we run the report on the fly, and where we also talk about the estimated sales in this quarter. And that is again measured on how do we plan to make the targets for the quarter, both from a financial metric standpoint and also from a sales standpoint. And it is one single visual where we have multiple systems. The project management charts are different, the sales team operate a different thing, the customer support team operates a different thing. All of these are synchronized into one Power BI dashboard, which is just refreshed on the fly. So we get to know the moment we close an order, when the discussion is happening, the metrics keep on changing just with a refresh button. So that's the power of technology, and I think my co-panelist has really covered it significantly well.
Thank you. So now I'm coming to Ankit. When we talk about new systems, that's very efficient, like in terms of speed, efficiency, so it's all very good. But when we talk about the established players, so they have the so-called legacy systems. So how do you see that these legacy systems finally speak to that new systems, and the integration finally happens in such a manner that finally it adds value to the business?
Great, thank you. Good afternoon, everyone. I represent Cast24. We are the India's largest used auto tech company. I will say tech plus data company. And in terms of business, as a finance guy, we are a co-pilot with the business head as well as CEO. We literally, in terms of our business, we created, anyone can sell car or buy car in literally next 30 minutes or 1 hour. It was not thought before 2016. We started this company 15, built a technology-based business where anyone can come and sell the car in a one click. A part of this, we are dealing in the various kind of service in terms of related to car servicing business. Everywhere technology playing very important and pivotal role in terms of creating the great customer experience. When business guy need to create technology for the delivering the business, you as a finance guy need to figure out various aspects related to front-end technology ERP, because company like us, we literally believe in creating technology stack in-house. And when we are creating technology stack in-house, we literally need to figure out each and every step with business guy in terms of processing, in terms of data gathering, in terms of compliance, control and all aspect. But important, when you are creating multiple business, multiple aspect, you think then and there only, because in a startup, when you want to grow significantly in a very short span of time, you think then and there only. You try to do various pilots, you try to see the results first and then eventually build the ecosystem. But company which is consumer tech company, initial focus on the front end technology ERP, They create the application system for the front-end consumer business, front-end consumer. At the same time, we literally need to, as a finance guy, we literally need to figure out what should be the our tech stack with the business technology, ERP and all. If it's a main game is the return on investment, because if you guys are doing the pilot, if you want to explore something, you can't invest so much money in terms of building a technology, because sometime it will be absolute, sometime it will be wastage, sometime it will be a workable, sometime it will not workable. So honestly, when in our company focus on the business side of ERP, finance plays very important role in terms of understanding the business process first, and then eventually creating the initial age MBV, I will say, for any startup. And then eventually if pilots go success, then eventually we build the sustainable process, sustainable technology, ERP. It takes time. And when you are talking about in terms of integration, because when you are building like in a very speed manner, when you are building like a pilot perspective, you literally don't focus so much in terms of scalability, you focus on the speed side. You need to deliver so many things in very short span of time. But when pilot is success, you literally need to figure out scalable solution, you literally need to figure out, you need to drive efficiency, you literally need to figure out various control leakages, need to think in the different aspect, and it takes time. And generally, technology people focus on the front-end ERP side so much, because the deliver in terms of GMV, deliver in terms of margin, it impact to finance ecosystem, because they need to figure out their job in the manual way. But eventually, slowly and gradually, company focus in terms of what should be the growth aspect, in terms of efficiency, in terms of other aspect. They pivoted from the small scale solution to large scale solution, and we as a startup company see these type of journey frequently, honestly. When you are migrating from the one system to another system, important aspect is the probably change management is the important aspect, because people are highly equipped with the old process. People are highly habitual in terms of what they guys were doing. Changing from the one process to another process, putting the control, driving efficiency, it's not easy. Literally, CFOs need to play important role in terms of driving change management from the top to bottom, so that it can be easily adapt and it can deliver the great result for the organization. But at the same time, honestly, if you are building a vertical type of ERP, figuring out the finance process, finance control in that vertical type of ERP, there will be if any business, there will be multiple ERP, like a 10, 15, 20, depending on the size of the organization. In our company, it's like, I can say, more than 50 type of ERP, which we use for internal running the ecosystem of Cast24. But integrating these ERP, one ERP is telling different thing, another ERP is telling different thing, because when we created first ERP, we never thought about the second ERP. But integrating these ERP also takes time. We need to literally rethink what should be the architecture, what should be the integration ecosystem. Probably we can figure out middleware which can do easy reconciliation, because in finance world, if one data is coming from one ERP, another data is coming another ERP, people spend time in the reconciliation and reporting aspect. But if you will create a middleware, which we guys are doing, it help in terms of reconciliation, in terms of easy reporting. And importantly, if your tech stack is there, if your journey is digitalized, automated, you will get lot of data from the complete digitalized journey, and eventually you can deliver the great result in terms of P&L, scenario analysis, where you need to invest, it is best decision for the company or not, what would be the real-time P&L, if my business head wants like in a day or in a hour, it's like a car level P&L, what we guys are doing, probably we can do. But integrating technology, it's very tough. And when you are creating the vertical level technology, platformization, figuring out the right attribute for the technology stack, which can deliver your financial control, operational control, as well as IT control, it's a slightly tricky. And it's a ever-going journey. Honestly, for any organization, they figure out every year what should be my technology landscape in terms of finance or in terms of overall company, and they focus on that aspect and deliver the things. Great. Thank you.
Okay, thank you. Thank you, Ankit. I think pilot project is something which can be really helpful, and especially from the organization perspective, and as a CFO also, we should push for this. That firstly we test the things, and then finally the things happens at scale. So very good point. Now I would like to come to Mahima. So in terms of data analytics and artificial intelligence, so how is it transforming the financial planning and forecasting?
Sure, thank you, Shekhar, and good afternoon, everyone. In today's digital age, of course, integrating AI into the business operations has become like a crucial step in staying competitive, right? Traditionally, decision making was more reliant on limited available data, even intuition for that matter. But now, as AI capabilities have empowered finance teams have a much more accurate, a much more objective understanding of the landscape, and therefore are more proactive and have more data-driven decision making, right? I'll also share a couple of examples of how we are enabling our customers who are leveraging AI capabilities on our digital finance transformation platform. So firstly, AI is helping with AI auto data mapping, wherein we look at how do we bring in the structured data into the platform for financial forecasting. So it's essentially aiding the team's efforts when we talk about data integration, data prep, data cleansing, and all of that. Secondly, AI is helping with anomaly detection. So providing a better risk management framework to the organization and, of course, improving the accuracy of the financial forecast. Thirdly, and more commonly used, is the predictive forecasting, whereby now finance teams can better anticipate future trends. So now they are better aware of the opportunities, challenges, and therefore can, of course, lead more proactively. And then to add on to what Omkar was also sharing a little bit earlier is having the insights at sort of at your fingertips. So now you can really ask those questions and have the technology generate those reports, those visualizations for you to have those discussions now with your business teams. Now, having said all of that, and we were discussing in some of the earlier forums also, we saw at the statistics of how organizations are adopting these technologies. And an earlier speaker shared roughly about 50% organizations are either in the piloting or have implemented these technologies, but there are other 50% who still remain either on the fence or are not actively thinking about these technologies, right? To me, adoption is key, and we've heard all different views on how do we ease and aid that adoption. In my mind, a couple of things become important, right? Firstly, the aspect of self-service. So I'm a finance user myself. I'll be tuned to adopting something new if it is easy for me to access, it's intuitive, it has a shorter learning curve so that I'm able to enable myself and equip myself, and I can own and maintain it as I go along in the future. Secondly, it should not be black box. There should be interpretability so that I can trust the output that is generated by these technologies. And then last but not the least, data. I don't think there's a silver bullet that can solve our data problems. It is an ongoing process, to have data integration, data ingestion, and improve the overall data quality. And I think it really becomes key to the success and being able to unlock that full potential of digital transformation. So to summarize, data analytics and AI are empowering finance teams today, where we are automating the routine task. We're looking at bringing in innovation, efficiency, improving the accuracy of the forecast, allowing finance teams to be more proactive, and therefore allowing finance teams to truly assume the role of a business partner in the organization, right? Where he says, "In God we trust, all others must bring data." Thank you, Shekhar.
Yeah, thank you. Thank you for this nice quote. Because we face this day in, day out, and finance being the custodian of the numbers, so we have to ensure that whatever we are presenting to management, that's backed by data, and that data is trusted actually. So now I come to Achal. When we talk about these technologies, so again, like it's a journey, and it involves a lot of transition from the old systems to the new systems, and there are a lot of considerations that we have to consider. So how do, as a CFO, we ensure that this journey is actually very smooth?
Yeah, thanks. Any smooth transition begins, whether it's technology or something else, begins with a very clear plan. So we need to define a very clear plan or a strategy broken up into various steps so that we can monitor them. So steps which involve aligning with business about what all are the key changes we are driving, what all the key initiatives or key innovations we are doing to transition that. When we are doing this, certainly cost considerations do come into picture. We need to balance innovation with cost, allocate resources very effectively, doing the effective ROI analysis or cost benefit analysis, which enables us to take right decision in managing the transition. Plus, whenever these tech-related transitions or are happening, the prime importance should be given to security-related stuff, because prioritization of security is important, because I've seen it in past when these transitions happen, a lot of leakages of data happen, a lot of leakages in terms of cyber leakages due to cyber attacks or encryptions not having not having proper encryptions, which lead to leakages of data which hampers company in the long run. So having proper encryptions, proper cyber security which can help prevent these sort of things, plus a digital audit if timely, which can help prioritize the CFO regarding what all challenges it can lead to when transitions are happening. Also, when these transitions are happening, a lot of control needs to happen, and control in terms of managing those steps, how these steps are micromanaged or taken into consideration. And lastly, I would say communication is a key, because effectively communicating or proactively communicating to what has happened, what is the progress in terms of transition, and what all needs to be done. It needs to be aligned with business so that corrective actions or preventive controls can be taken, which kind of build this system and ensures a smoother transition without these hiccups.
Okay, thank you. I think when we talk about finance, then controls has to be there, and you rightly captured this aspect. So whenever we are ensuring that any tech, we are doing any implementation, then we have to ensure data privacy, data security. A lot of regulations are there in this space, especially in the financial sector. So we have to ensure that all the regulators are taken care, all the compliances are there, and most important is the security of the data is taken care. So I think with this we can conclude here. I will just try to summarize. So we tried to touch upon all the basic factors to the advanced level factors. For example, we touched upon the customers, that we need to take care of our customers when we are driving tech changes. Then we talk about people, because it's the people who will be actually bringing that change that is required. And then again, the process. So we are expecting that there will be efficiency in the processes, and we will have like speed, but again this needs to ensure that whatever technology we are investing in, so that brings that speed and accuracy for us. And then obviously we talked about the security controls which have to be there, and the most important thing above all is that whatever we are spending today, so that should be like considering the future aspects. The tech has to be scalable, and it has to consider the future needs as well. So you should not be focused only on today, because we know that the space is evolving quite faster. So we have to ensure that whatever we are spending, that considers the future needs, and the most important, it is aligned with our business needs. So whatever we are doing is actually making sense for us from the business perspective. So with this we can conclude, and the floor is open for the questions. So we have one big hand coming up. Yeah, sure, you can. Someone can pass him the mic, please.
We can have one Q&A.
Hello. Yeah, hi, good afternoon, panelists. I'm sorry I asked this question to Mr. Jogendra Singh as well, and he gave me a very interesting take on it, but I wanted to know the opinion of the current panelists. So when it comes to digital transformation, I think we've come a long way in the previous 3 decades. There was a time where we used to follow the gold standard, wherein the value of the currency was determined by the amount of gold that was exchanged. However, we are moving into the digital era. So I would like to know your opinion on CBDCs, that is the central bank digital currencies, and how it would affect the current financial economy. Because right now, a lot of the governments are adopting CBDCs and are, giving, incentives to adopt CBDCs as well. So what would your take on this be?
So any of us really aware on this topic? So we are not frankly aware on this topic what you are mentioning.
CBDC, central bank digital currencies.
Sorry, we are not aware on that.
Okay, sorry, no worries.
Maybe anyone here who is aware on this, so they can touch upon, because anyways, like you come from such a good experience background. So if anyone knows who can answer his question, so that will be good.
So the question was that...
No, I'm saying that if anyone else can answer your question, or if no one can answer, then maybe better you answer yourself. Okay, so thanks a lot. Thanks for clarifying and answering this question on our behalf. Thanks a lot for that. So I think with this we can conclude.
Yes.
Thank you.
Thanks a lot to all the panel members for sharing their thoughts driven by experiences. To do the honors, I request Mr. Jogendra Singh from Hero Corporate Services Private Limited to please join us on the dais. Starting with the felicitation, I request you to please moderate our moderator, Mr. Shekhar Sood, Group CFO of Bajaj Capital. Ms. Mahima Arya, Associate Directors at Wolters Kluwer. Mr. Ankit Maheshwari, VP and Head of Finance, Cash 24. Ms. Priya Sharma, Vice President of Finance at Ecom Express Limited. Mr. Omkar Prasad, Finance Director and Chief Accounting Officer at Schneider Electric. Mr. Krishna Tadepalli, Director of Sales at Avalara. Mr. Achal Modi, Head of Finance International Business at OYO. And Mr. Krishna Tadepalli, Director of Sales at Avalara. Requesting everyone to please take the center stage for a group photograph.